In this video, traders, we're going to look at the average true range indicator, different ways to use it in your trading. Valuable indicator, this. Hey traders, very warm welcome to you. So, if you're a subscriber, appreciate your subscription, thank you very much. And you know, if you've watched a lot of my videos, I like ATR. I just like the ATR, right? You've seen me talk about strategies before if you've watched any of the videos. And the reason I like it, guys, is because it really just gives you a raw figure on what the current market is doing. You know, average true range. I've done a video where I've gone into detail about how it's calculated, but ultimately it's exactly what it says it is. It's the average range of the market you're looking at. If you're looking at a daily, it's the average daily range. Looking at 15 minutes, the average 15-minute candle size. It's a little bit different to that because it allows for gaps and stuff, but it's a good benchmark way of you seeing what the market you're trading is doing in the real world. You know, what the price action is. So, some ideas to use it. Okay, the first one is as a stop and target method. Whether you're swing trading, whether you're day trading, it is very, very useful. Now, I've got it on the line down here. Very often I like to have it as a histogram, just personal preference. I like to see the kind of mounting changes, but you know what? It makes absolutely zero difference. So we'll leave it on a line for now because I know that many of you will use that as the default, and that's cool. It's absolutely fine. Again, it's personal preference. So here we can just see how this is behaving. Got Euro US dollar 15-minute time frame, and this is on the side here, so we can see, you know, we've got a 10 pip range here. Now we're going quiet in the morning, 6 o'clock in the morning. Europe's not quite open yet, and we've got a 5 pip range, 6 pip range. It gives you an idea on how to trade it. Now, Euro US dollar not quite as volatile as some of the others. If you put on some of the others like Euro yen, for example, you're going to see, in fact, let's stick it on now and have a look. You know, we're just throwing up examples and learning. You're going to see a different kind of different approach. You know, some of the highs here are more like 12 cents. Some of the lows here go down in the middle of the night to 8 cents. So it just depends on what's going on, right? If we look at Euro Swiss, you know, even lower. Look at GBP USD, which is considered kind of a little bit more spicy. We're spiking at kind of 15 cents. NZD USD, even lower. So it's going to depend obviously on the price of the instrument you're trading, of course, and it's also going to depend on the volatility at the time. So let's go back to our Euro US dollar example, because I know that's a crowd favorite. A lot of people like to trade Euro US dollar, very thick, very tight spreads. Why not? So here we can see we've got a spike. So what's the point? The point is we can use it as a target or we can use it as a stop. We can use it as both. So if I go back to the histogram just so I can see exactly where it was at a specific point in time. So let's say we bought this breakout, or we bought the flag or whatever it was, and we're long. How are we going to adjust our stop? Now, if we don't have a technical place for our stop, we can literally just go on our 15-minute chart or 60 or 4 hourly, daily, whatever, and say, oh, the ATR is 10 pips on a 15-minute. Let me use X times my ATR, 1.5 times my ATR if I'm being aggressive, 2 times, 1 times. You can use it as just a kind of seed for your formula. So if you like to work with 3 ATRs because you're looking for, you know, a really big target, then that's fine. If you're scalping, you might say, hey, I want one ATR. The pattern I'm using is a scalping pattern. It's a flag, it's a little pullback, it's a little fake out, whatever it may be. I don't want to go more than 1 ATR. Very simple. You can look at it that. It's the same with targets. You can say, hey, I'm using 1 ATR stop, so I'm going to use a 3 ATR target, 30 pip target on my 15-minute chart, or on my daily. I've got a daily here. Look, you know, I've got a 100 pip range at the moment. I'm going to look for a 200 pip move, and I'm going to use a 100 pip stop. Or you even go and split it up. Like if you're taking it on a 15-minute chart, you might say, hey, I'm going to use a 3 ATR stop, so 30 pip stop. I'm going to use a 1-day ATR target of 100 pips. You can see how you can mix and match this. And the key that I like about this, guys, is that you're not forcing your will onto the market. You're saying, hey, market, give me what you can, i.e. the phase you're in at the moment, like when it's back down here on the daily chart, 70 pips, up here 100 pips, crude oil even different, DAX even different, they're all different, go through different phases. So you're not forcing your will saying, hey, you must give me 200 pips when the market is in slow mode. It has been for the past 6 months. It's doing 40 pips a day. You know, yes, it may do it, but it's less likely to do it than if it's doing 100 pips a day and you're getting the momentum play. You see what I mean? So stops and targets are very, very useful. The second useful way of using ATR is as a filter. Let me explain to you this. If you are day trading and you look at your daily ATR and you say, hey, the daily ATR is 80 pips, for example, and you look at your daily, your 15-minute chart, your hourly chart, 4-hourly, whatever, it's 5-minute chart even, and the market from low to high has already done 70 pips or 80 pips, 70 to 80 pips. You can look at that and say, hey, we've already done the ATR for the day. What's the chances of us doing more? We could do more. What's the chances of us really ripping to the stratosphere from here, assuming there's not increased volume, assuming other things to look at? Pretty slim. Am I going to take a long? No, I'm not. So you can immediately start to filter out stuff that's no good for you. Hey, we're up already 1 ATR. I'm ignoring longs. And a clever part of your trading plan might well be, hey, within 75% of the ATR, so let's say the average range of the day is 100 pips. So if we do 75 pips in a day, as soon as we get past that, or 70, whatever it may be, I'm not going to trade longs or shorts if we get to that extension. And so it allows you to filter out bad trades and chase trades. It also allows you to get involved with counter trend trades. So you say, hey, the ATR is X, anything from 60 pips to 90 pips range, I'm going to look for a fade back to the mean, a mean reversion type trade. So you can filter it like that and help you get involved in your intraday trades. Similarly, if we look at a daily time frame, we can use it as a filter for that too. We can say, hey, this thing is almost like a protective filter. This thing's too low. The volatile's too low. We've declined from high volatility to low volatility. I don't really want to take it because I've got a counter trend. I've got a counter trend type mean reversion strategy. I don't want us to kind of shift volatility again and go up. We're in a low period of volatility at the moment. Or it's too volatile. It's not kind of my thing. You can look at it and see where you've been relative to the previous years, relative to the previous quarter, whatever time frame you're on. Again, you can frame your trading plan around what the price action is telling you. And the good thing about the ATR is if you're flicking between forex pairs, between indices, between stocks, at an eyeball, you can say, hey, this is what I need to be using as a stop. This is the kind of moves we're getting. Does it fit my criteria? Yes, it does. Let me look at it more closely. No, it doesn't. Let me move on to the next one. So it speeds up your filtering process if you're the type of trader who likes to just kind of rip through charts and see what's going on. So very powerful for targets, guys. Very, very powerful for stops, and also handy for your intraday day trading filter, and also handy from a swing trading perspective that allows you to tune into the stuff that really suits your strategy and style, and also allows you to keep out of any of the things that you really don't want to be in. And finally, before we move on, guys, you can do the same thing that I said with intraday with swing. So in other words, we can go to a weekly chart and look at your ATR. You can go to a monthly chart, look at your ATR, and say, hey, I am a swing trader. The monthly ATR is 500 pips, for example. We're watching it on the day. We're already 2 weeks into the month and we've already done 400 pips. There's no specific catalyst that I can see. Perhaps I won't chase this trade because the ATR has been sitting at 400 to 500 for the past 3 years, and we've already done that in the week. We're not halfway through the month. I'm not going to get involved in chasing it. So again, that can help you from both a day trading and a swing trading perspective stay out of trouble. Because if you stay out of trouble, and I'll talk about before this, if you can remove a third or 10% of your losing trades, you'll make significant progress in your P&L. Anyway, guys, if you like this kind of stuff, give it a thumbs up. If you're a subscriber, I appreciate your support. If you're not, consider doing so, because we talk more on stuff about strategy and just generally anything that can help you become, I hope all of us become better traders. That's all we want to do, right? Okay, take care, guys. See you in the next one. Keep your risk management, whatever you're up to. Bye-bye.